Good afternoon, Market Chameleons and everyone joining for the first time. Thanks for coming by and checking out our after hours show with Ryan Mastro from OptionsRobot. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Ryan, OptionsRobot, or myself are registered investment advisors or a broker dealer. If you're searching for investment advice, always reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon and OptionsRobot tools and products. With that, one last look at this disclaimer, and let's welcome Ryan Mastro to the stage. We'll be talking about what's going on after hours and what he saw today. How are you doing, Ryan?
I'm doing well. How about yourself?
Great. Let me share your screen. There we have the Market Chameleon landing page, and here you go, my friend.
Yeah, so it's been a crazy 2 days. Obviously, we went into a war with Iran, and let me just kind of pull up a chart here. Let me get off of that one. Let's see if we go over to a template, better template. Just use we can use that one. How about that? That will suffice. So let's get rid of some of the other things on the bottom. So let's just look at, again, market in terms of what we've been able to do in a short period of time, which is quite insane of the movement we had yesterday. So let me just see if I can kind of zoom in on this to kind of give you some context. And I want to highlight, and I've been doing this in a lot of different webinars I've done over the last 2 days, but this is just crazy how much they are willing to step in and buy this market. If you look back, today was a neutral day, pretty much unchanged, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, it's about 17 candles. And 3 of them have been red. Now, I'm not saying there haven't been kind of bearish down days where they kind of gap down and never really recover, but every one of them has been above the close, right? Except for those 3 days. And now here today, we're kind of having another red candle. Last time we had a red candle, we had a big gap down. Last time we had a red candle here, we had three days down. So I'd be a little bit nervous about what's coming. I thought today was kind of like almost a profit-taking day after a big run-up yesterday. Yesterday was just insane. And I think the market rallied. Zero DTE is playing a massive factor in terms of gamma and where they're positioning. So I would really be paying attention to where that gamma is in terms of your gamma exposure and what's moving in terms of the Qs, the spiders, the IWMs. Diamonds don't move as much. They're not moving the market. But in terms of those 3, really, really moving, and the semis. So they're the ones that are really moving the market at the moment. So you look at those. Well, let's look at an SMH. Right, you can see big. Let me actually take this off so you guys have more screen real estate here so you can see a little better. So looking at something like that, I mean, this was an unbelievable move, bouncing off of the 100-day. That is like 374. We got as high as, what did we get up to today? We got to like high of 403. That's crazy for a two-day move, right, in terms of really what should be going on, right? It should be a normal kind of day. You go down a little bit, go up a bit. But again, I think the news of a couple different things happened yesterday. One was at least rumors. I have not been able to confirm anything, but they're basically saying ships are getting through the Strait of Hormuz. There was a tweet that went out that got deleted. So they were saying one was being escorted. Again, I think the problem now is, oil has come off in such a big way. You look at something like the USO, right, just in terms of a proxy here. And, this has been very wild. They really pushed this thing back up today. So there was definitely some nervousness of what was going on in oil and trying to move this around. So some people are really, concerned that this may actually have another spike, that Iran has basically come out and said, you can't just say when the war is over, right? So I think that's basically a revenge tactic here that we have to be a little bit concerned with. We've seen some, if you look at some of the other ETFs that have been kind of down and haven't really recovered a lot, something like the XLF, right? That is been on a little bit of the weary side. I think you start to look at some of your consumer staples, maybe starting to turn the tide here a little bit. We did see the last couple of days, the security stocks. So like Crowd had a really good run up last week and stalled out a little bit today, gapped up and sold into some negative news. PNW stalled out as well. So those have been pretty on fire, right? Pretty much all green candles and looking decent. Your database companies like Snow had a really ugly looking day today. We also looked at Datadog, DDOG, right? That had another ugly looking day today. So they kind of rolled over a little bit. Maybe that's on your radar in terms of looking at opportunities. Looking through some of the kind of even just like quantum names, really nothing there. QUBT, nothing's really rallied there. The space names that was all hyped and pushed up, we have not been able to get anything out of those in the last couple of weeks here. We had the one push, so like an ASTS or like a Lunar or a PL. So some of those hypey kind of speculative names really haven't done anything. Even some of our kind of drone names that have you would have thought have been doing very well in this space, and with the war going on, Red Cat's doing okay. I mean, there's a couple of them. I don't know them all, but Red Cat was a smaller one. KTOS was a decent one. I think Carmen was one of them. I think that was another one. That seems to be doing a little bit better. But then you look at, I would say that you look at the big weighted names. So your MAGA, your MAG 7, MAG 8, MAG 9, right? In terms of your Microsofts, right? They're doing okay. And I think what you want to look at, I did have that up on the screen here. Let me see if I can pull that back up. No, I don't think that's it. These are just plain ones. So this is with the ATR. I don't have that last one up there. That one that had all of those names in a comparison that were showing all those big weighted names and showing you how they all are trading over the last couple of days. Here's Oracle. You can see that's just kind of been sitting here as a dog with those database names. That's going to have earnings tonight, so that's definitely something to be watching here tonight as it goes into tomorrow morning. I can try to pull that up for you in a minute, but I don't even know if that one's out yet. But let's get over and see if there's some unusual paper here in Market Chameleon. And I love doing the unusual option because it gives you a couple different things. The UOA gives you the directional lean, at least theoretically, right? Depending if it's done with stock or if it's straight options. It also gives you their target of where they think they are going to be reaching. Sometimes it's in the money, sometimes it's at the money, sometimes it's out of the money. And depending on what they're trying to do, how aggressive they want to be. And that also gives you kind of a duration, so that they're going out a month or going out 2 weeks or 3 weeks, or if it's this week, then okay, they're expecting a decent sized move this week. So, that all that stuff is important to kind of pay attention to as we're kind of watching it. So XLF, we already kind of talked about. Microsoft, kind of a little bit of a dog today. That had a little bit of paper. Neo, HIMS has been on fire, right? In terms of looking at that on the chart. We can just look at that real quick. That one has been had some news on it, and that they did a deal with Novo Nordisk, expanding their offering there based off of that. So that will be very, very interesting if that can continue to climb. I'm not really interested at the moment. It's gapped up, and we've had 2 red candles at it on the moment. So not one that I would really be watching here to be a big trader on. The paper doesn't really excite me in that way. So coming back over, AAL. Now, I think there's rational thought processes to be in the airlines, where if you look at these names and you say, okay, I want to look at the charts, they've had a good rally, right? They come off the bottom, and that didn't take. Okay, so AAL, let's go back to that one. So you go to AAL, and they're all doing pretty much the same thing. They rallied off the bottom yesterday, but we're not getting the follow through. So I think what happened today with oil going back up, obviously it costs more for these planes to fly if the price of oil is going up. Their jet fuel and all that costs more money. But I think when you look at the nervousness around what's going on with this war, it's still there. It's still starting to linger now. So I think that's what happened today. If you look at the Qs kind of on the intraday and the market in general on the intraday, they rallied it up and they sold it back off. So I think there's still some concern here. Yeah, we had some bullish paper, but I'm not really that excited about any of the airlines at the moment. I think we're still going to be in a little bit of a trouble here when push comes to shove. So AAL, DAL, Jets, right? They're all had paper, UAL, so they all had good paper. I would imagine even something like the RCL, which was looking pretty good here. RCL, did that trigger? Yeah, it just kind of just sold back off. So nothing really that exciting. CCL, NCLH, right? These are all names that are in the Carnival Cruise Lines, the Norwegian Cruise Lines, and the Royal Caribbean Cruise Lines. And they're just down and kind of back below kind of support areas. So not really, that exciting quite yet. I'd have to see something like, okay, maybe oil is truly starting to roll over a little bit more. That's probably when you want to say, okay, I'm in these for a trade to rally back up. I'd probably give myself a little bit more time, let them play out. Once this kind of oil is a little bit more, you have a little, I should say, have a little bit more confidence in the oil going down and staying down, right? We don't have that right now. There is no ceasefire, right? There is still people getting shot and killed by bombs and the whole 9 yards. So it's a lot less. Don't get me wrong, it's a lot less. And Trump did come out and say something. We're near the end. We're ahead of schedule. But I don't think Iran is just gonna kind of let off right now at the moment, right? There's talks there. The new supreme leader is the son of the old supreme leader. So we don't know how that's going to play out. Trump says he doesn't like it. So what's that mean, right? How do they move that and how do they play into that? So coming back to like a blue owl, I honestly would shy away from blue owl just because of the rumors and everything that's going along with it. So just because you have some bullish paper in there, I think the negativity here is just overwhelming. So I really don't want to play a $9 stock that could quickly go to zero if another shoe drops, right? They've already had massive private credit. I'm getting like things from so as we're kind of watching this, I think we have to just be very cautious of that private credit story, right? There's a couple other names you may want to pay attention to, like an Apollo, right? APO or KKR, a couple other names there. They're just kind of lingering near the lows. So I'm not really that excited about those either. So Glassworks, bearish, right? So we come back over to that. Just go to the charts here real quick. And you can see on my chart, right, they're starting a little bit of a rally. And they came in for some bearish paper. So yeah, I mean, maybe, right? I don't mind the trade back to the upside if it keeps going. I'm not really that excited with the bearish paper coming in. That doesn't really give me anything on, saying, okay, there's bearish undertones to this. Coals, I'm not touching. AAOI came in as bearish, so maybe Caesars. Caesars is one that I would typically shy away from. It's not that big of a mover in terms of really getting you excited. It's been doing okay. So you look through a couple of the other names, maybe some of them are a little bit better. Go through something like an MGM. We're kind of sitting here not doing much in terms. Oh, there we go. So not really doing much in terms of the charts. LVS kind of dogging it, like a win, right? In terms of that's really looking ugly. So maybe Caesars is one of the best. What is the other one? MLCO, which is Melco Resorts, is more of an Asian play. And they're just kind of down. Now, you think about this play versus maybe like lodging in itself, like Marriott not doing much, Hilton not doing much. Hyatt is really in the same boat. So a lot of those plays, there's a Wyndham. So they're all just kind of down. I just think that travel and leisure space, your airlines, your cruise lines, your casinos, they're all in this pain point where you don't have as many people traveling because of what's going on war-wise, right? So, people are just like, and the lines are really long right now. So I would shy away from a lot of those. And I think that's why you're seeing this in general down trade on those. But this is, again, bullish paper. So the problem with paper, the problem with unusual options flow is they can be buying calls, make it look like it's really bullish, but turn around and be selling stock against it. So I think these are the things that I try to work my way through and kind of analyze. Zscaler is one of those cybersecurity plays, and that was a bearish trade. So this did roll over a little bit here today. So maybe that's a little bit more of one that you could kind of keep an eye on. So let's kind of come back. I want to find like one or two ideas in here. And again, if there's questions, well, feel free to jump in because I know I've talked a little bit about the market in general, but haven't really.
We have a bunch of questions have come up. So we'll start off from this morning. Two people who could not be here were asking about the symbols USO and TMC, but I'll just give you USO first.
So USO is basically a proxy for oil, right? It's the oil fund. And my one concern here, I know I had a lot of traders that were talking yesterday about, it's just too high. They're buying puts and riding it down, and they were using this as a proxy to do so. So this does, I believe, have options that you can trade in terms of being able to trade it. Now the volatility is up, right? So because of again how much it's moving, so it's a lot more expensive to trade than you would normally be trading it. And this is for a short-term option tomorrow. So you can play the short-term options there if you wanted to. You can see how crazy that is. So that's a Wednesday trade, Friday trade, and then in next Friday, then they'll release the weeklies in here. Oh no, that's going to be Monday. Sorry, Monday, or that's Wednesday. So it's Wednesday and Friday only in this one. So that definitely intrigues me. But I think, again, you're going to have to be dialed in and watch for tape bombs, right? So I don't think we're out of the woods yet. So if you want to play call sides, it just may be a little bit expensive if you're just only playing it for the day. Again, you're looking at like a 490 on the at the money option 106s. So it's a little bit expensive for one day for me. Again, if you come back over here to the chart, I put on the screen the ATR. So you're moving at about $6 a day. I typically try to shoot for a 2-to-1 ratio where I get at least $2. 2 times the amount of movement for my option price. And why I do that is because when you look at the movement, if I can get, let's say I have a $2 option, if I can get $4 of movement, that's a 50 delta option, then I'm going to be making 100% or potentially making 100% return on my $2 option, right? Because delta goes up, right? If you say every dollar I get 50 cents, then that's something I think we're going to be watching and trying to kind of price things out. Now, there may be better opportunities that you really expect really good volume and really good volatility, right? This moved right $10 a day. So something like that I think is very important as we're kind of watching what's going on here. So USO still on my radar because of the Iran war. And the other one was the metal company.
Yeah, TMC.
Yeah. Yeah. So, I mean, this one's starting to look pretty good, right? I don't mind this trade. It's a cheap trade. It's probably one you want to kind of keep in your back pocket, because I think of what's going on with Trump. We get past Iran and you look at some of the critical metals, right? These could all be on the radar. Another one maybe we'll look at is CRML, which is critical metals. And again, that could be on the radar here for something in the same kind of light as TMC. So I like this one. I would probably wait. Let's see, we'll zoom in a little bit more and give you some really good numbers here. So if we kind of zoom in here and you can see that, we had a great run. We can't get above that blue line is the 200-day moving average. So I think from a breakout perspective, I probably, personally, I'd want to wait till maybe those highs. So if I just kind of draw that in there and, draw that, that's something like 668. It's not that far away from where you're at right now. I mean, it's, 30 cents, no big deal, but that's a big move for this thing. And then again, your first big kind of resistance area is going to be your 50 and your 100. You get through there, then probably looking up here is my next target there. So that's around 720, fill the gap back on that day back in there. That's a good level as well. So that's 750-ish on that one. So that would be my next couple of levels on that one. Now we can do even a trade on that and see how it looks. Let's see, we'll set up that level and we'll do an entry bot. I think we said 6.8 something, or I'm going to put 685 and I'm going to add an option. So we'll buy a couple of these because they're relatively cheap. I'm going to go out. I'm going to give myself maybe a couple of weeks here. 680, I'll probably buy the slightly outs. Now, you know what? So cheap, I'm going to play the ins. So how are they? So they're trading they're a little wide. Maybe I play the sixes, get a little bit more delta on this because you're not expecting a massive move, right? So typically when I'm looking at a stock that I'm only trying to get maybe $1 or $1.50 out of, I want to have a higher delta so I can capture more of that move with a higher delta. So willing to spend a little bit of money on this when I do get that legit breakout. So something like the sixes, I would do that as a create. And then for me, I wouldn't use a generic one like that because I have levels in there. I would go in and use those levels specifically. So let's just look at what those levels were. So they are, I'm just going to approximate. Come on. I lost my levels. We had said, I think we said right in there, 721. And just because I'm going from screen to screen here. So 721, I think we said to fill the gap, that's 750. I like that area up in there as well. So let's use just those two levels. Let's use 721 and 812. So let's come back to our positions, and we're going to go down here to this one, and we'll select create a management bot. So what I'm going to do now is use the stock value and saying, if I go greater than that 721, I want to roll my option, and I'm going to roll it up to the same expiration, and I'm going to just roll it up to, I'll roll up to the, maybe I'll roll from an in the money to a specific strike. So maybe we go to slightly outs at that point. So we're going to go to the 750s on that. And I'll do that on a quick and then create. So now I got one trade in there. I don't have any stops. I can go build stops in a second, but this at least gives me a trade to kind of go down. Now I want to build off of that. I want to say, if we go in here again and it's still moving, I want to add another one, which again, you can't do this in any other system. So I'm going to select the stock again, go greater than that 8. I think we said 820. And I'm going to say, I'm just going to, at that point, I'd be pretty happy with the trade. So at that point, I may just say, I'm going to get out of the trade. Now I can go back and add, here's what that looks like. So if I do get into the trade on the trigger level, here's what I would do at 721. And here's what I would do at 820. I would just exit my trade for whatever profit I had. Now I can go in and add a stop if I want to, right? Or if I don't like any of those and I don't have the time to go build one out, I can go create one or use one of the suggested management bots. Or if I have a system set up that I have one for maybe smaller stocks that's rolling every dollar or taking profits on the options for every 30% or 40%, whatever you want to do, then you can drop that in here. So I mean, I can cancel these, one click, cancel, confirm. And I think I have one in here for if my option value gains 20%. So here, if it goes up, now it's a cheaper play. So it's probably not what I want to do. I probably want to make that a little bit more. But if I preview that group, I now have 6, 7 trades in here already built out with stops. So if it does move back against me, I'm okay, right? So that's all done and figured out. So I apologize for going off on that, but I think it was just a good example to kind of show how to use those levels as we talked about it.
Yeah, that was great. Jim is asking NVIDIA.
I love
Market Chameleon had some market alert today that had a 185 call calendar, short March, long April. Is it time? The question basically, is it time maybe to get back in, look at getting back into NVIDIA? I guess that's the major thought.
And I don't mind it, right? I think that's probably a good play if you really think it's going to be kind of sitting in this area, right? Because you think about what's going on. If it's a call calendar, right? So 185 and it's sitting there, right? So if you're thinking, okay, it's going to sit in this zone. Now, the question becomes is how far of a move can you absorb, or how much do you think it's actually going to move, right? And one way to kind of tell on that, I would go back and look at, I want that page, I wanted this page, option chains. So I would look at the straddle on this. And if you're looking at, I don't know what the expiration was, March 25, so probably the 20s maybe in here. So I'm just going to use this hypothetical. I don't see exactly what it was, but let's just say the March 20s. And you look, what I like to look at is, can the premium in that front week absorb the movement that I think this thing is going to do? Right? Yeah, you have the longer term against it. I get it. But what you don't want to do is get run over. So if you're really a little bit more bullish, you may not want to do the calendar. You may want to do a little bit more of the diagonal. Because if you think it's really going to start to run. Now, again, I think what comes back and what's more important is I like the breakout. I like getting above the 100 and the 50 even more. And I think semis were hot today, but they did pull back, right? They pulled back significantly. So I think that's my caveat for tomorrow is I'd want to see the semis and your NVIDIA, Taiwan Semi, AVGO, AMD, those big names all moving up like we did see today, but they really were not, gangbuster by the end of the day. So a calendar works in this scenario. If you think you're going to get some trading back and forth, what it does is it gives you that pin out further and allows you to work the decay model in the front. And I'm sure, Jim, I know you, it sounds like you do a lot of these, but I like the trade. I just don't know if you were a little bit more bullish, then I may do the calendar, maybe do like let me go back to NVIDIA on that. I think it was, like you said, 185. So maybe buy the 185s in April and then sell maybe a little bit higher up, maybe the 187.50s or the 190s. So that gives you a little bit more room to absorb it on the upside, right? If you really think you're going to get a bigger delta move that way. Now, the opposite side of that is the 185s gives you a good premium because if it does move down, that helps you offset some of it. So really, it depends on how bullish you want to be. I would say if we get a strong close tomorrow and the market closes strong, I'd probably lean with the diagonal. If we stay weak, I'd probably lean with the straight calendar. So I think it's a really good spot that Market Chameleon found. Any others, Will?
About that. Sorry, who's Oracle?
Oh, Oracle, I apologize. I didn't see that.
After market, it was up on Bloomberg today. Someone said Oracle is the next Lehman Brothers, and he's like got a guy thinking strangely. Like, could that even be possible? Oracle, the next Lehman Brothers?
Yes. Well, yes and no. So they do have a legitimate company, but the problem is they're over levered in terms of their debt. And I think the problem is, and I don't know, there's two different things that I've seen about Oracle that, and again, let's just zoom out on this, put this truly into perspective of where this thing has been, right? We were at 340, we're trading at 150 now. So this thing's been cut in half. And the problem is they keep leveraging their shares to basically fund other AI projects. So they've invested big into ChatGPT or OpenAI, whatever it is. They've built out these data centers, and there's a couple people that have called into question what's going on with one of their data centers. I was hoping, and I haven't had the time to listen to the replay yet or listen to their conference call, but that should supply some intel into how things look. And I think coming out of this conference call will give you some good insight. I would be willing to play puts if the market really started to give you a naysay on this, where they said, okay, we're taking out lows here, threatening lows here. I mean, look back here. This is a big run and sell off, and if we start to take out lows, this thing could really be in trouble, right? I mean, you go back to, this is 24. Again, right, you're talking about a big move here, almost could form a head and shoulders. But if we fail, this could get pretty lousy pretty quick, right? That's a $30 move right there, going from 150 down to the lows of 120. So I'd be very cautious with the earnings. Obviously, market's closed, but listen to the conference call. I would let it open tomorrow, let the volatility drop, and then make a play, because once that implied volatility drops, whoops, lost the screen there. Once that implied volatility drops, that gives you a better opportunity to get into cheaper options on that one.
All right, perfect. The next question Jim had was, and I'll put it up there so everyone can see it, is Starbucks. It closed above 100. Jim feels that it's 100's been a resistant level. If it can sustain its time to get back in, high of 117 back on March, I guess, do you see any way it could make a move to its previous high?
I do and I don't. Like, I'm a little more pessimistic about this space. Mainly just because of where the consumer is. I think there's a lot of, you start to look at the consumer, are they going to be spending? I mean, let's keep it real, right? Starbucks charges what, like $100 per cup of coffee. So, I love that
humor, by the way. That was awesome. As I'm drinking a Dunkin' Donuts, which I think is like $4 now.
Right. Yeah. I mean, I'm the one stuck paying my kids' bills for Starbucks, and I'm going, are you kidding me? Were you kidding me? Like, But on something like this, I think this is probably a slightly shorter term play, maybe like 2 to 3 weeks out most. And if you get the pop, great. Maybe you want to get a pop and sell into it, because if you don't get the love, then at least you have some premium against your move there. So I may even play something like this, and there's probably not enough premium in it. I try to reduce my premium, maybe like a call vertical or a call condor or maybe a call butterfly, and just say I'm willing to put some money into it. And if it goes, it goes. If it doesn't, it doesn't. I mean, because you can get a call condor for dirt cheap on something like this because it's so cheap. But I think the options are already just too cheap to even consider it, right? There's not enough premium to sell. If you go out like 2 weeks or 3 weeks, let's just say March 27s, your 101s are $3. You know, maybe you want to sell like a call vertical 106s for, just not much there, right? It's just not really that sexy. So if you're gonna lean, I'd probably lean with a straight option, right? At the money and see if you can get something in it. Had it up here, didn't I? Starbucks. Nope, I lost it. Starbucks. I don't mind the trade. It's been on fire. I just don't know if it's going to have enough in this market to really get the breakout. My first target would be that 105 area. Then probably into 110. Big round numbers plays a big factor in some of these names. And then the highest close up there is about 116. So I could definitely see it. Maybe get a good roll in along the way if you can get any of those pops on that.
All right, it's right up against the hour. Do you have a time to go a little later?
No, I can go. I can keep going. Yep.
All right, Jim was then asking about ARM.
So ARM's one I've been watching for a while now. I liked this breakout here. And so let's just look at it from a pattern perspective. Let me see if I can draw something here. So you have this, kind of uptrend. You had this downtrend, right? So it didn't take. So this downtrend, so this was kind of an expanding wedge. I don't like that this faded, right? We actually have a position in here that is a longer term selling calls against it, riding this wave back up. I do like that they're actually putting together slightly higher low, and I keep clicking on the wrong one. So let's just use this and go through there. I like the higher low, but now I need to see the follow through that it's going to be able to at least get up and test the highs. Because right now, if you look at it from that perspective, you're almost in a diamond pattern, right? You're almost in this kind of down here, right? This forms a really awkward looking diamond. But if we can get some explosiveness to the upside, again, this kind of goes back to the SMH. It's like, can we get the movement out of it? Otherwise, I'd probably use the 50 or the swing low here as my stop. And that's what I kind of did in my positions with my other group. What's
Perfect.
next?
We had a symbol ZVRA.
ZVRA. I do not know it. Therapeutics must have gotten the drug approved. I think I may have looked at this one on the gap up list this morning with an approval. So again, the problem with a lot of these is you don't know what phase you're in. If it's a phase 2, phase 3, like I'd have to do that type of research. Once you know what phase you're in, how big your market is there follow through that's going to kind of keep this one going? Because, okay, there's a lot of demand or whatever the rationale is. So I'd want to do a little more fundamental research before I would really kind of recommend anything here. But for targets, I see a kind of 1204, got a little bit of resistance up here, 1229. Then you can kind of just work your way back through the swing highs, right? You're working all up to this. So if you can truly start to get this going, doesn't look like it's had too much love. Well, you have a nice rounding bottom. This would almost constitute a kind of cup and handle. So if you get through that 13 area, you stair step your way back up through these bigger ones. So again, I'd look and do a little more research on what the data is. Maybe you know already. I don't mind the trade. It's just you'd have to back it up with some of the fundamentals to really stay in the trade, because I'm sure volatility's up a little bit on the news and whatever it is. And oftentimes these just get faded, right? They'll go up a day or two and then they just drop off like a rock. Or the company may say, we're going to issue shares against the big move here, and they take it all the way back down to $8. So just be careful on that one.
Perfect. Jim was asking, when Ryan uses the ATR, does he use the recent daily or does he use historical average?
So ATR, I'm using the most recent data. So, but the ATR is an average of the last 14 days. So I'm going to look at, there's a true range, which is the daily range. And then there's an average true range. So the average true range basically gives you the historical 14 days. So I'm looking at that average, and I'm going to try to get a gauge of where we are, obviously inside of that relationship. I mean, so even just looking at this and saying this is what the average is inside of this relationship. So I like the ATR just to give me a proxy for kind of the characteristics of the stock. Every stock's a little bit different. And I really like the ability to kind of hone in against my option prices. So yeah, it's not the perfect number, right? It's nothing's ever perfect, but it gives me just a gauge, right? It's just a number and it's just an average, right? So I'm trying to get a good feel for what the stock has done. I know guys that use shorter ones. I know guys that use longer ones. And I see the nuances between both of those. I usually keep the 14 because that's what everybody asks me. What do you use? I'm like, I just use the generic 14 one just because I get asked about it all the time. But I've often used the true range as an overlay on this one to see what the spikes are inside of the day and how they kind of average out. So if I have a big day like recently, that like this one, you can see why the average is up now because you had a big jump in what it's typically moving. It was moving at about 40 cents. And now when you had a $3 or $4 gap, it's going to jump up your average. So it's always good to know when you're having gaps and you have to take those things into consideration because the ATR does take the gaps into consideration.
Perfect. And last question from Don't Blame Me. He's asking, is AAL oversold?
It is, but I think the problem is you need the confidence in oil to jump back into the trade. Because if oil continues to stay in the 80s and 90s, you're going to be in a downtrend in AAL for a while. So you need oil to reverse, and then AAL, UAL, DAL, all the jets, all the cruise lines will probably have a reversal and start to move back up into that space.
Perfect. Great job, Ryan. Thanks for bringing this to the Chameleon community. Thanks for staying an extra 10 minutes or so. Super helpful.
I do these all day long, so we talk for an hour each one. So if you ever want to go longer, I'm good. Just to put a little pitch in, not a hard sell, but again, everyone wants to try this. I know a lot of your guys are interactive brokers. We're scheduled, I think, in the next probably 3 weeks to start testing on interactive brokers. So if you do want to come in and start to see if this would work for you inside of that, I can give you the two-month trial. So that's that start 2026 MC still going live. So if that is something that you guys are, so we're going to have the next 2 months, we're going to be connected to, we already have Schwab, Alpaca, Tradier. We're going to be connected to interactive brokers, Webull, Tasty Trade, and there's a third one there. I'm not sure of it. I think it could be Publix. So all of those coming on board here in the next month, it's probably 2 months. Interactive brokers, I think, is going to be the third one on that list. So excited to really get that on board because I know a lot of you guys are, it's one of the most popular ones in the country, but they're just really hard to connect to. So I'm hoping we get that connected for you guys. Again, if you want to come try this out for 2 months free, start 2026 MC is the coupon code, and we'll go from there.
Perfect. Thanks, Ryan. And we will see you next Monday, my friend. Have a great week.
Good. You too. Have a good one. Thanks.
All right. Hey, everyone. Thanks for joining another webinar with Ryan Mastro from OptionsRobot. I recommend everyone give it a try. If you check the emails in the morning, I do put that offer out to all the Chameleon community in the emails down towards the bottom. Remember, we have the morning show with Dimitri tomorrow. If you didn't catch it today, we had a webinar with interactive brokers just mentioned. Check that out. Everyone have a great, safe trading day, and we will see you tomorrow. Bye.